In 2021, a young couple in California spent 8 months trying to buy their first home. Every weekend, they visited open houses packed with desperate buyers. People offered cash above asking price. Some waived inspections completely. Others wrote emotional letters begging sellers to choose them. One small suburban house received more than 30 offers in 3 days. Eventually, the couple gave up and renewed their apartment lease, feeling defeated and honestly a little angry. Because deep down, they started asking the same question millions of Americans quietly ask today. Why do home prices keep rising even when ordinary people can barely afford them anymore? And the uncomfortable answer is this: because almost everybody financially benefits when real estate prices rise. Governments benefit, banks benefit, investors benefit, homeowners benefit, construction companies benefit, politicians benefit. Even entire economies psychologically depend on rising property values to maintain stability. That sounds almost conspiratorial at first, but once you understand how modern economies work, the pattern becomes impossible to ignore. Real estate is not just housing anymore. It became one of the biggest financial systems on Earth. And in countries like America, rising home prices are deeply connected to how wealth, debt, retirement, banking, and consumer confidence operate. Think about the average American homeowner. For many middle-class families, their house is their largest financial asset, not stocks, not businesses, the home itself. That means when housing prices rise, millions of people suddenly feel wealthier psychologically, even if they never sell the property. Economists even have a term for this: the wealth effect. When people believe their homes gained value, they spend more money. They renovate kitchens, buy cars, take vacations, open credit lines. Consumer confidence increases because homeowners feel financially safer, and modern economies heavily depend on consumer spending. This is why governments become extremely nervous when housing markets decline sharply. Falling home prices do not just hurt investors, they hurt confidence itself. And confidence quietly controls enormous parts of the economy. In America, especially, the entire financial system is deeply tied to real estate. Banks issue mortgages worth trillions of dollars. Retirement funds invest in property markets. Local governments rely heavily on property taxes. Entire suburbs are financially structured around rising home values. Even ordinary Americans emotionally connect homeownership with personal success, stability, and adulthood. That psychological attachment makes housing politically powerful too. Politicians know homeowners vote aggressively when property values feel threatened, so policies often indirectly support housing growth, even when affordability becomes painful for younger generations. And this creates a strange modern reality. Society publicly complains about expensive housing while financially depending on rising prices privately at the same time. That contradiction explains why solving housing affordability feels almost impossible politically, because lowering prices significantly would financially damage millions of homeowners who already depend on their property value for security. Another major reason the world wants real estate prices rising is debt. Modern economies are built heavily on borrowing, and rising property values allow banks to safely lend more money because homes act as collateral. When prices increase, lending expands. More mortgages, more refinancing, more home equity loans, more spending. Real estate becomes a machine, generating economic activity constantly. But psychologically, this system changes how people think about housing entirely. Homes stop feeling like places to live first and start feeling like financial investments. And once housing becomes an investment system, society starts rooting for prices to rise permanently, even when it hurts affordability. If you are new here, subscribe to Dollar Neck because this channel is about the real psychology behind money, wealth, class, and modern society.
And honestly, real estate may be one of the clearest examples of how economies quietly depend on rising asset prices to keep people feeling financially secure.
One of the strangest things about modern society is that rising real estate prices hurt millions of people while simultaneously making millions of others feel financially successful. That contradiction sits at the center of the global housing system. Think about an older homeowner in Texas who bought a house in the 1990s for $140,000. Today, that same house might be worth $700,000 or more. On paper, that person suddenly appears far wealthier than before without working extra hours or building a business. And psychologically, that changes everything. Rising home values create emotional security. People feel smarter financially, safer, more stable. They believe their future improved simply because the asset underneath them increased in value. Governments and banks understand this psychology extremely well. A population that feels wealthier usually spends more money and panics less politically. That is one reason housing markets receive enormous protection during economic crises. During recessions, governments often rush to stabilize real estate because collapsing home values can spread fear across the entire economy incredibly fast. We saw this clearly after the 2008 housing crash in America. Millions of families lost homes, banks collapsed, unemployment surged, and economic confidence shattered worldwide. That crisis terrified governments because it revealed how deeply modern economies depend on stable or rising real estate values. Since then, many countries became even more aggressive about protecting housing markets from severe declines. Low interest rates, stimulus policies, mortgage support programs, and central bank interventions all helped push asset prices higher over time. And while homeowners celebrated rising equity, younger generations quietly faced a completely different reality. Across America today, millions of young adults feel locked out of home ownership entirely. Prices rose faster than wages in many cities for years. Down payments became overwhelming. Mortgage payments exploded alongside interest rates. Rent increased simultaneously. That combination created enormous frustration because younger Americans increasingly feel like they are financing a system they may never fully enter themselves. But politically, falling home prices would create another massive problem. Existing homeowners would lose wealth rapidly. Consumer spending could collapse. Banks could face instability. Retirement plans connected to real estate would suffer. Entire local economies could weaken. That is why governments often prefer inflation and slow affordability decline over sudden housing crashes. Rising prices may create inequality, but falling prices create panic. And financially, most systems choose inflation over collapse whenever possible. Another major reason the world wants real estate prices rising is because wealthy individuals and corporations treat property as a long-term wealth storage system. Real estate became global. Investors from around the world buy property in major cities not only to live there, but to preserve and grow wealth. Luxury apartments in New York, Miami, Los Angeles, London, Dubai, and Toronto often function almost like financial assets themselves. That global investment demand pushes prices even higher, especially in desirable locations. And psychologically, humans trust real estate deeply because property feels tangible. Stocks feel abstract, crypto feels volatile, but land and housing feel physically real. People believe property represents permanence. That emotional belief keeps attracting money into housing markets generation after generation. Even during uncertainty, many investors still choose real estate because it appears safer emotionally than many other investments. But this creates another uncomfortable reality. Housing increasingly serves two purposes at once: shelter and investment. And those two goals constantly conflict with each other. Affordable housing helps workers survive. Expensive housing helps owners build wealth. Modern economies try balancing both, but financially, the system often leans toward protecting ownership value first.
If this video is helping you see how deeply housing shapes modern economies, subscribe to Dollar Neck, because the psychology behind money often explains society better than politics alone. And honestly, real estate may be the single biggest emotional asset class in the world today.
At its core, the reason the entire world wants real estate prices to rise is because modern economies quietly built themselves around the assumption that asset values will keep increasing forever. That includes homes, land, commercial buildings, and entire neighborhoods. Rising property prices became deeply connected to retirement systems, banking stability, political confidence, and middle-class identity itself. And once societies become dependent on rising asset prices, reversing that system becomes extremely dangerous financially and psychologically. Think about retirement in America today. Millions of older Americans expect their homes to help fund retirement eventually. Some plan to downsize later and keep the difference. Others borrow against home equity. Many simply trust rising home values to strengthen their long-term financial security. If property prices suddenly dropped dramatically nationwide, millions of families would instantly feel poorer overnight. That emotional shock alone could reduce spending across the economy massively. People buy less when they feel financially insecure. Businesses slow down, hiring weakens, fear spreads quickly. Governments understand this chain reaction very well, which is why housing markets receive enormous protection politically. But there is another uncomfortable side to this system. Rising home prices quietly increase inequality over time. People who already own property build wealth faster while renters fall further behind. A homeowner in Seattle or Miami may gain hundreds of thousands of dollars in equity simply by existing in the market long enough. Meanwhile, renters often spend years paying rising housing costs without building ownership at all. That creates growing class frustration, especially among younger generations. Many Americans today no longer see housing as a normal life milestone. They see it as a financial competition they are slowly losing. And psychologically, that changes how people think about the future itself. Delayed marriage, delayed children, delayed stability. Housing costs now influence major life decisions across entire generations. Yet, despite all these problems, governments, banks, investors, and homeowners still quietly root for prices to continue rising because too much financial stability now depends on it. That is the trap modern economies created. If prices rise forever, affordability collapses. But if prices fall too hard, economic panic spreads. So the system constantly tries managing a middle path, where prices keep increasing slowly enough to avoid collapse, but not so fast that society breaks politically. The problem is that balance becomes harder every year, especially in major American cities where demand remains high while supply struggles to keep up. Another reason real estate remains so powerful emotionally is because humans attach identity to housing. People do not just buy homes financially, they buy status, safety, neighborhood identity, school systems, and emotional security. A house represents stability in a world that increasingly feels unstable. That emotional connection makes people defend rising property values fiercely because falling values feel personal, not just financial. And honestly, this may be why real estate discussions become so emotional politically across the world. Housing affects survival, identity, class, family, and future security simultaneously. Few financial topics touch human psychology more deeply than housing. So why does the entire world want real estate prices to rise? Because modern economies became addicted to the confidence, spending, borrowing, and wealth creation rising property values produce. Real estate no longer functions as simple shelter alone. It became a giant financial engine powering global economies. If you enjoyed this video, subscribe to Dollar Neck for more realistic conversations about money, psychology, class, and modern society.
Like the video, share it with someone struggling to understand today's housing market, and remember this: in modern economies, rising home prices are not just about housing anymore. They are about protecting an entire financial system built on the belief that tomorrow's assets must always be worth more than today's.